here are your hosts of Financially Tuned, Mark Fricks and Tony Shore.
Welcome to another show of Financially Tuned with me, Mark Fricks, from MasterPlan Retirement Consultants, and our host today, Tony Shore. We are really excited to have you join us today because in this show, we're going to be discussing ways to help you create generational wealth and to provide you with ideas and opportunities to maximize your existing money for your family.
Excellent. Well, Mark, thanks for that great intro. And Mark, it's great to be back here again with you today. How are you doing? How's your week been?
Been a great week. You know, Tony, I always look forward to our time together. I just have a lot of fun doing this, and I hope you do too. It sounds like you do.
Mark, if I was doing any better, I'd be twins.
That's right. Well, it's great to hear you today, Tony. You sound like you're in great voice. Let's get going and let's share some great ideas with our listeners today.
Well, definitely. Mark, can you maybe start us off today by giving us an explanation on what generational wealth is?
Well, I'd be happy to. That's a good place to start, Tony. Generational wealth is actually a specific feature of financial planning, and it's directed toward passing along stable, important financial resources to your future generations. And really, it's a way for you to financially provide for your family and loved ones after you're gone. It's, I guess you can call it creating a lasting legacy or something tangible you can pass on.
So when people are working towards creating generational wealth, are there general ideas that you see people focus on to try to achieve that goal of having wealth available for their loved ones after they're gone then?
Yeah, Tony, what I found is that most people fall into one of 5 scenarios when working towards creating generational wealth. The first scenario is insurance appraisal. And this is people having existing coverage that they don't need or they pay too much for or need upgraded. Secondly is maximizing of annuities. People that own annuities for a variety of reasons, which of course include safety, deferring taxes, and of course creating retirement income. But unfortunately, many do not use all the features in the annuity, which could cost their family thousands of dollars when they pass on. The third scenario is required minimum distribution opportunities, otherwise known as RMD opportunities. Now, Tony, qualified plans such as 401ks and IRAs, 457Bs, they're a great way to plan for your retirement. And tax deferral is one of the greatest features that you can implement with your money. But there is a problem. That basically is when money is left to the beneficiaries, there could be a tax nightmare. A gentleman that is well known to both of us, Ed Slott, who is a nationally known CPA and tax planner.
Oh, yeah.
Based out of New York. Yeah, he calls it a tax time bomb. It's just waiting to go off once you pass away. So, there are opportunities there to be able to stretch that out, and we'll touch on that again later. But of course, when you reach 70 and a half, you do have to start taking money out, but there are ways to stretch that and leave a better legacy to your family. A fourth scenario is what I call insurance arbitrage. And that basically is the concept of using several types of insurance plans to take the money you have today and multiply it by 2 to 5% or more, really. And really what it is, it's leveraging money. And this just means more money for your family, and typically it's in a tax-free fashion. And finally, tax-free or tax-reduced income with built-in inheritance. And basically the uncertainty of future tax rates, which we feel or will be higher in the future, is really a concern for everyone, especially when they're in the planning process. So understanding today's guidelines and rules and learning how to take advantage of your opportunities is one of the best things you can do for your money. And this concept really allows you to prepare for retirement without many of the traditional limitations.
Oh, that sounds like a good option. Now, the first scenario that you mentioned, Mark, was insurance appraisal, where people who have existing coverage reevaluate what they don't need or pay too much for or maybe need upgraded. Now, it's important to re-examine your life insurance because it often protects many of the most valuable assets you have, like your homes, cars, health, and loved ones, right?
Yeah, that is an important part of the planning process, Tony. When we get started with a client, one of the things we'll do is kind of an insurance audit. And that's where we kind of just go through and see what coverages they have and then what coverages they need and kind of see if they fit together. We not only look at disability and homeowners and auto insurance just to make sure, again, that they're properly covered and kind of putting a second set of eyes on it, if you will, but also when it comes to life insurance and multiplying money that you may want to leave to loved ones. What we have found, Tony, is that as folks go through life, they kind of just add policies. They'll pick up one over here, they'll pick up another one over there, with good intentions, of course. But what happens is there's really not a plan. There's not a roadmap as to what they need and what the purpose is for that particular money. So typically, we find one of two things: either they're paying a lot of money for coverage they don't need, or they don't have what they do need to replace perhaps lost income, even in retirement, that may occur if they have a premature death. One other point too here, Tony, is that many of the newer policies will have better rates because, of course, over the last several years, the mortality tables have been updated. So now actually rates can be cheaper now because of the fact that we're living longer. And so insurance companies are able to charge a little bit less when it comes to the insurance portion of our policies, or the life insurance portion. So the newer ones give better opportunities, and it's just a great idea to kind of go through and do an audit of all your insurance coverages.
Yeah, I think re-looking at what you have is always a good idea. Mark, maybe you can give our listeners some examples of some different types of insurance policies that are available.
Well, on the life insurance side, which is really probably the bigger concern when it comes to retirement planning, there are several available. I'll try to keep this very simple and not ramble on because it can get complicated. But the basic, most simple type is term insurance. And just like the name says, it's really developed for a term or a period of time. And so this is really the cheapest form of insurance in most cases. And so you just kind of say, hey, I'd like to get this much insurance for 10 years or 20 years or until my house is paid for, or as long as I have certain loans, or maybe until I reach a certain age. The second one is a whole life policy. This is kind of the traditional standard of insurance when it comes to life insurance that holds a cash value. And generally speaking, the death benefit and the premium stay the same for lifetime. So you know what you're getting, you know what you're paying, and you kind of know you have insurance forever. And there is some buildup of cash for emergency or temporary needs. The third type is universal life, and this again is a form of permanent life insurance. It's similar to the cash value, but just much more flexible. Next is what they call index universal life. Again, it is similar to the universal life, only instead of just growing at a rate determined by the insurance company, this one grows based on what the returns are in the stock markets. Maybe the Standard & Poor's 500, the Dow Jones, things like that. So you actually have the opportunity to make more money in the index universal life. And lastly, there are things on these policies called riders, and riders are special additions to these policies that offer further benefits. So a typical rider could be maybe adding a children's coverage or a waiver of premium if you're unable to work. A great new one, relatively new, is a long-term care rider. You can actually pick up some long-term care along with your life insurance.
Well, that sounds great. And in fact, it sounds like some of these insurance policies, especially with riders, are very similar to what an annuity might do. Is that right?
Yeah, it can be. It can be. That's in many similar fashions.
Sure. Well, you know what? Our time is actually up for this first segment of the show. Mark, do you have anything else you'd like to add before we take a quick commercial break?
Well, I know a lot of folks are sitting there scratching their heads saying, Mark, I really don't know what I have. So that's a common problem. So what I would suggest is getting in touch with us. We've got a couple of things we can provide for you. First of all, just give us a call and I'll certainly chat with you on the phone and just kind of see what problems you feel like there may be existing in your current plans or your current insurance scenario, I can be reached at 770-980-9262, and I do personally return every phone call. So I won't be having an assistant call you back or another advisor. So I'll be glad to chat with you. Or visit our website, which is MasterPlanYourRetirement.com. Go to the Contact Us button, or visit some of the videos and publications we offer as well that could certainly be a big help.
All right. Well, thanks so much, Mark. We're going to be right back with more from Mark Fricks on Financially Tuned after this. To hear the rest of the show or for more information, go to MasterPlanYourRetirement.com or call Mark at 770-980-9262 to schedule an appointment.